Today's edition of Toggle's Daily Video Insights. My name is Jan. I'm the CEO and co-founder of Toggle, and as many of you know, this is the moment where we review one of many insights that Toggle has produced this morning. If you like these insights, would like to see them more often, please subscribe to our YouTube channel and you'll be able to receive quite a steady diet of them. Today, the focus is going to be on Colgate-Palmolive, the well-known consumer goods giant. And what Toggle is really highlighting is that in this particular case, you've had a cross the 10-day, 200-day MACD, which is a technical indicator some of you will be very familiar with, has indicated that the sell-off, in fact, may have stretched too far and that this is the moment for the stock to bounce. As, again, many of you are familiar with, this is the projection based on 24 prior occasions where we had a similar configuration, and historically the median gain for the stock in the aftermath of the following 3 months was just over 8%. So the starting price around 79.70, rising to 86.32 according to this historical paradigm, with a stop loss level on the price dip below 76.39. Of course, what you would really expect for this driver to remain relevant is for the price action to remain somewhere inside this confidence interval. Now, what's really quite appealing about this interval, about this pattern, is that looking back, look at the frequency of this configuration. You can see that each time when you've had this crossover happen, just visually, it does seem like most of the time the stock price recovered and rallied subsequently. So one of the reasons why the quality of this insight has been rated so high is particularly the resilience of this pattern, even through the business cycle recessions of 2001 and then the crisis of 2008, 2009, and then again most recently. So the back test is showing you quite a remarkable convexity risk reward of this particular pattern, where again the upside reached as far as 30%, whereas most of the downside has been contained somewhere around 10 to 15%, and actually most of them seem to be far lower than that. Now, as we already discussed, it's always good to look at the 360 picture, so clicking on this button will take you to the overview for CL, and here you can see that the overall number of insights that have been produced, really this is the first one that we've had since this sell-off that began at the start of the year. And so Toggle is now highlighting that perhaps the correction might have ended and that the stock could be ready to recover. As always, you have a combination of past insights and alerts here for you to do a more deeper dive, but for now we're going to conclude on this note here for Colgate. And if you receive our daily brief, take a look. We also discuss ways in which you are able to take advantage of potentially coming inflationary trends given what the Fed is doing and what the government is planning to do. So take a look. If you don't have the daily brief, you can sign up at toggle.global, where you can also test drive the Toggle Copilot. Anyway, thanks again for your attention, and we will speak to you again tomorrow.